Hello everyone, this is Tracy Newton with a special market update for Thursday, January 19th. We're going to take a look at the S&P 500, the Nasdaq Comp, and the IWM, the small caps. Starting off with the S&P 500. It was a down day in the equity market today. The small caps did underperform. The Russell 2000 was down 0.94%. The large cap S&P 500 was down 0.36%. Looks like the markets are taking a bit of a cautious tone heading into tomorrow's inauguration of Donald Trump as president. And with today's price action in the S&P 500, you had a bearish engulfing pattern form, and that bearish engulfing pattern is up against an area of resistance that came into play initially back in the early part of December when the market initially peaked. Now, the fact that a bearish engulfing pattern is confirming an area of resistance increases the probabilities of additional downside follow-through. On a move to the downside, my key level of support is right around that low that was established during the last trading day of 2016, right around 22.32. On a drop below there, that would confirm the price action that has been underway over the past several weeks is a topping formation. And I've taken the height of that pattern and projected that from the low that was formed on December 30th to get a approximate downside target, which takes you to just above the 2190 area, which is in the vicinity of that morning star that was formed in the beginning of December. So I'm going to be watching this market very closely. Again, potential topping formation, bearish engulfing pattern. We've had several bearish candle signs develop in recent weeks. So we need to see if the market does follow through this time on the downside. Initial support will be at that low that was formed in last week's trading, right around the 2255 area. On a drop below there, again, my target would become around 2232, that low that was established on December 30th, leaving the possibility for a breakdown and follow through to that early December low. As far as the Nasdaq is concerned, also a bearish engulfing pattern as a result of today's price action. First support is defined by a zone at that high that was established toward the latter part of December, as well as the highs that were established in mid-December, right around the 5500 area. Just about 55, right around 5502 to just below 5500. On a drop below there, my target would be that rising trend line that I have on the chart, just above the 5450 area. If that trend line fails to hold, I think we get a further correction down to that late December low, which I have noted on the chart with that line there that was also represented the low of a bullish Harami. If we get a break below these support levels, I do think the market has further to go on the downside. And I don't have it plotted on this chart, but if you look at a stochastic oscillator, which measures price momentum, you do have a bearish divergence in place between the index and the oscillator. That tends to be a bearish sign. So I think we have more to go on the downside in the Nasdaq, but I'm going to be watching that initial zone of support to see if it can hold. If it does, the broader bias is going to remain firmly to the upside. On the upside, resistance is going to be at the recent high, followed by the round number 5600, which may have psychological value given that we are at record highs. And then the next level of resistance I'd be watching on a breakout would be that rising trend line I have drawn on the chart. I'd see where that falls if the market is on the approach of that level. That could represent your next area of resistance. And finally, the IWM, a small cap index, ETF. What happened today, moved to the downside as I stated. Small caps underperformed. The IWM came down to test the lower boundary of the falling trend channel that I have drawn on this chart. A breakdown below that trend channel, which would also result in a solid breakdown below the high of the evening star that was formed in late November, would leave my target at the early December low, which looks to come in right above the 130 area. That would be my downside target. On the upside, if we do get a bounce in the market, I'd look at the upper boundary of this rising trend channel to provide resistance. We need a breakout from that trend channel in order to suggest that the market can move back up to the highs, if not break out to new record highs. So as it stands right now, bearish engulfing pattern on the S&P and the Nasdaq, down day on the small caps, now testing with IWM, now testing the lower boundary of a falling trend channel. Looks like we could see more downside in tomorrow's session. Now, before I end, I just wanted to note that you may have all gotten an email earlier today regarding a webcast that Steve Nison held Wednesday night on how to become the ultimate candle charts trader. In this package, he combines Candle Chart's most comprehensive training program, the DVD Mega Package, with our powerful candle scanning software, the Nison Candle Scanner, or NCS as we refer to it. NCS is programmed with 28 different candle signals and will highlight those patterns on your charts. You can also scan for the market for patterns using NCS and set up alerts so that you're notified when a pattern develops. I learned how to become a much better trader using all of these resources that Steve has made available, and I want you to be able to take advantage of them as well. And in order to find out more about this package and our special discounted price as well as bonuses, which will be ending soon, please visit www.candlecharts.com/ultimate, and you can see all the details about this special priced offer. Thank you very much for joining me, and I hope you do well in the markets tomorrow.